the rental income that comes in just stays into that piggy bank because it's just something always happens. It's always a roof or an AC or turns or all of those things kind of happening at once. And we've talked about this so many times on your channel. You have to have some type of arm, whether that's your W-2 job, a fixing and flipping, a wholesaling business, or something that's bringing in big chunks of cash.
Right.
None of this works, in my opinion, without that.
Alrighty, folks, we are on a cruise ship with the one and only Jason Pritchard.
Look at that view. What's up, guys?
Real quick, I was just thinking about all the stuff we've talked about this week on this trip, which we'll get your feedback on Alaska. But I want to let you know that I see a lot of Grant Cardone in you. I was lucky enough to catch up with him one time, and what he and I talked about was he was constantly, I on the video with him, I said he's shedding his skin like a snake.
Yeah.
I was meant it as a compliment, right?
Because
he kept growing, and I now learned that you're doing that yourself.
Yeah.
Right? You've taken what was successful repeatedly, and you're very good at being uncomfortable and going for bigger things.
Yep.
So you're selling everything or selling a lot, and what's going on?
Yeah, it's we are definitely in a season of change and growth, and this is the second, maybe third time that this has happened for me over the last 11 plus years that I've been involved in real estate. And I think it's, lots to unpack here. I want to start with just the mental side and some of the challenges, I think, because I think that's the biggest part. I think when we're going through these growth trajectories, I think a lot of times we're our own worst enemy. And so we've got to get a lot of clarity of what we want to do in the future. And we were talking about this on the trip, I have never been in a place where I've had more crystal clear clarity on exactly what me, my team, and my business is going to do over the next 10 years. And I've also simultaneously got an 11-year track record of casting a vision and living into that vision. So when you combine those two things, it's always, growth is always going to create some discomfort, but it also feels more exciting than I've ever felt before when we've been having one of these leaps. It's like a quantum leap is what's happening right now.
Right.
We've spent the last 3 to 5 years making slow, incremental progress. One of our core values in our company is Kaizen. So it's just that 1% better every single day.
Yep. And
we've been doing that. All the hard work, all the boring stuff, all the fundamentals, just keeping our head down, not getting distracted. And now it's like I played video games when I'm growing up. It was like Mario when he gets into the tunnel and just warps like 3 levels. That's what's happening right now. And so it's fun, it's exciting, it's scary, all kind of rolled in one.
Well, again, I mean, I think about all our talks over the years, and you're right. I think this is at least your third. It could be your fourth evolution.
Yep.
And just like Grant said, you've got to leave something behind that was already successful so you can get that quantum leap.
Yeah.
So, talk about, this vision you have for the team, yourself over the next decade. What's changing?
Yeah, and this is the part that, I said right now, when you've got this self-confidence and the track record, that makes these changes in certain aspects a little bit easier. But, this is where the challenge is for me is, I have had an identity that's been tied to, even though we do have a very strong transactional side of our business, that has always been to serve growing the long-term growth of our portfolio, right? And so, we are in the midst of selling some properties that frankly I didn't want to or was expecting to sell anytime soon. And I think through some of these past like steep growth trajectories that I've been on, I've learned that we've got to clear some room on our plate to make room for the next iteration and the next version. And you can't accept all of the new cool stuff without making some room and getting rid of some of the old stuff. It is you have to have bandwidth. And that's been a struggle for me because frankly we don't need to do any of this stuff that we're doing. I don't need to do any of this.
Right.
Like we're totally fine.
That's where I go. It's like you're good.
We're in a great place financially. I've never been better off from a net worth standpoint, from cash in the bank standpoint, from a cash flow standpoint, from our business performance standpoint. So there is a, hey, is this really the right move right now? You know what I mean? Does it really make sense in this kind of wonky real estate market that we're in? Does it make sense to take some of these risks? And there are definitely some calculated risks that we're taking. But again, I go back to clarity of vision. I go back to knowing that inner voice that's in me. I've spent so many years really getting in tune with that and learning how to listen to that. And that is what gives me the confidence to say, okay, we've spent all these years building up a portfolio, 100+ doors, all of this stuff, and now that version of Jason, we're going to have to be okay with shedding that skin you said to make room for this new growth, and that's the phase that we're in right now.
Yeah, that's the key about the new growth that I got from Grant, was you really do have to consciously, again, shed the skin so that you can be ready for what's ahead. And you know, a lot of people would choose to just be comfortable.
Correct.
Right?
Yeah.
It's easy to be comfortable.
It is.
And you know, I admire your clarity of vision, willing to continually grow. It's fun to watch from the sidelines.
I've just realized that one of the big driving factors behind me is consistent progress, you know, and that progress is going to look and feel different depending on the season of your life and your business that you're in. Like I said earlier, we've been in this kind of slow, very incremental, very methodical progress that if you zoom in, you can't really see those changes. If you zoom all the way in and you pay attention, you have to zoom out and look at the business over a 2 or 3 year trajectory on a graph to see, wow, we've done some work, but like the day-to-day feels monotonous, dude. You know what I mean?
Yeah,
it really does feel like just kind of a grind and a slog.
Paint, flooring.
Yeah, and this, and just getting, just optimizing and fine-tuning every single knob and lever and dial on our business right now. That's what this last 3 years have been. And I needed to do that to give me and my team the confidence to say, hey, if we're going to, you know, push all in on land, okay, and really have this vision for the land development company running in parallel for the next few years with the flipping and the wholesaling company, and then eventually overtaking it, you know, that company, the core business right now has to be dialed in. It has to perform, because if that is not performing, there is no land company. There will not be. It's the fuel that's going to get that airplane off the ground, and it's going to be a 3 to 5 year runway really to get, because those deals take forever, you know, and they're high risk, they're high reward. There's lots of different things, and I don't know as much about land development. I've been on a crash course for the last year, but when it comes to flipping, wholesaling houses, you give me a house anywhere from Stockton to Bakersfield, California, I can tell you in less than 5 minutes what it's worth, how much we got to put into it, how much we need to buy it for. I know I know that like the back of my hand. And so, you know, now the foundation is going to be built off of our core business right now.
So when you're talking about reducing the portfolio 20, 30, 50% maybe, is that just about freeing up time? Is it about having a more of a war chest for the predictability? What's the thinking?
More of a war chest. We've got a really good system and a team in place that manages the rental properties that we own. So we're not overextended. We have the bandwidth to manage the portfolio the way it exists right now. So it really is stockpiling cash and building that war chest up, because you need a lot of working capital in order to do this. And even though we have access to, you know, private lenders and people that will fund our deals, I'm still learning the best way to put together the capital stack on one of these land development deals. And it isn't, you know, 10 to 12% a month with interest. That's not how it's going to work. You know what I mean? And so we're still getting, you know, finding our sea legs when it comes to, you know, doing that type of capital raising, structuring the debt. How do we do all of that stuff? And so, just like I did when I got into the flipping business, I felt more comfortable putting some of my capital up at risk before, you know, we went out and just started raising money. And there's a component of that plays into this right now too. And so we need the cash to do this. And you know, thank God we were smart enough to stockpile some of these assets when we did. And now we're cashing in some of those chips, man, and we're pushing them into the middle.
Yeah, it's funny. I had a conversation with Ryan Pineda. Similar story, right? He was building a pretty decent portfolio of rentals, and you know, he had a season where he had some pretty heavy losses. And he says he sees rentals as breaking the piggy bank. Right, go getting the equity, extract the equity, right? Because the cash flow, a couple $100 a month, even though times 100 units, that's 20 grand. but you have multiple seven figures in equity there that you can just go get relatively quickly.
And we've never honestly tapped into the cash flow that our rentals throw off,
Right.
because it's still, we've got debt on everything. We don't. We were talking about this earlier too. I know you've got a tranche of properties that are free and clear, and we just haven't gotten into the position where we own anything debt free, and so. The rental income that comes in just stays into that piggy bank, because it's just something always happens. It's always a roof or an AC or turns or all of those things kind of happening at once. And we've talked about this so many times on your channel. You have to have some type of arm, whether that's your W-2 job, a fixing and flipping, a wholesaling business, or something that's bringing in big chunks of cash.
Right.
None of this works, in my opinion, without that. You know what I'm saying? So if you don't have something that's bringing cash, and ideally in big piles coming in on a regular basis, it's going to be hard to scale this up.
To get the velocity,
exactly.
escape
The velocity is a great word. Yeah.
Yeah. So again, it's really interesting because again, you're really clear on your vision. Again, I've never known anybody that's tackled what you're doing right now. Can you kind of paint the timeline for somebody who doesn't really get land development?
Sure.
What does that look like?
So land development, at least the way my team and I are doing it, again, is very focused. So we've spent a decade plus in mainly the residential space, like understanding how to buy, fix, and sell residential properties, single family houses at or below the median price. Like we know that product very, very well. So the development that we're doing is related to that. And this is what I mean by that. We are only focused on development where we can buy a piece of property. On the low end is 15 acres, right? Because anything too small, some of the big builders really don't want to take it on. So let's say 15 acres on the small side, up to about 100 acres on the large side, right? In our core market, Central California, because we know that market very well, right? So we'd be looking from basically Modesto to Bakersfield, right? Because we know those markets, we know what single family houses sell for in that area. And we want to develop single family residential lots that we can sell to home builders. That's it, period, point blank, that's it. So we want to do a couple different options. On this large Bakersfield deal that we're doing it now, we're taking it all the way to a finished lot.
Okay.
So we're doing all of the grading, we're doing all the underground infrastructure, we're bringing in water, sewer, power, gas, we're doing streets, curbs, gutter, sidewalks, driveway approaches. Literally, when we sell a package of finished lots to a builder, within 30 days, they're throwing houses up.
Okay.
So that's one option that we're doing, and that's typically the way that you can extract the most value out of the deal. It's the equivalent of like wholesaling to flipping, right? So what we're doing is like the flipping, where we're taking it all the way and then we're selling those lots.
Squeezing all the juice out.
Exactly. And there's lots of studying that I've done on how these big national home builders have changed their business model over the last, let's call it decade plus. I'll use D.R. Horton as an example. Like all of these companies have moved away from going straight to the farmer, right? Buying 100 acres from the farmer, changing it from ag zoning to residential zoning, then taking it all the way through the entitlement process, then taking it through the horizontal construction to finish lots, because these are all publicly traded companies, right?
It hurts earnings per share.
And when they have all this debt on their balance sheet because they're essentially land banking, right? It doesn't look as good for their shareholders, right? And so DR was one of the leading builders to kind of change this model 10, 15 years ago, where they said, you know what, we're essentially in the manufacturing business. And what we manufacture is single family houses. And if we can do that at scale, we build out a larger competitive advantage from the other builders that are out there, right? So if we can go from, I think, 25 or 30,000 homes a year, which is what they were building about 10, 15 years ago, to now like 100,000 houses, economies of scale, they get labor cheaper, they get materials cheaper, all their vendors and suppliers have to bend the knee to somebody like that, right? And so the gold standard from what I've seen in learning about this business over the last year is a finished lot, right? So the other option for us is we can go to a paper lot, which is basically we go to the farmer, we do all the entitlement, we hire our engineering team and our surveying team to map everything out, chop up all the land, and basically engineer all of the lots, and then we sell paper lots to those builders. So that would be the equivalent of like wholesaling. I think there's still obviously money involved because that entitlement process is hundreds of thousands. It's a six figures to go through all of that stuff, right? So entitling the land and then doing paper lots can be like a 12 to 18 to 24 month process.
Okay.
Building out all the finished lots, because you have to do that in stages and phases, that's a 4-year project on the deal that we're doing in Bakersfield, right? So I mean, I don't have enough money where I can just stroke that check for years and years and years and years. I mean, it's $10+ million that we're investing in to finish all the infrastructure to sell the lots, probably more like $12 million. And we need to have cash in order to do that,
Sure.
And so that's essentially what our business model is.
So how does the lending work on something like that? Again, I've never done this, but like just a single family lot, you go buy the lot cash, that becomes encumbrance for a construction loan. Is that similar? Or
Correct.
Not really?
So I'll give you guys some details on the deal that we're working on right now. So we have about 250 lots total that we're going to sell to a builder, right?
Yep.
We're going to break those 250 lots out into 4 different phases. So let's call it 60+ lots per phase, okay? So we don't need the money to do all 250 at one time, because the builder doesn't even want to build 250 at a time. You know what I mean?
Okay.
So let's say the first phase is 60 lots, and it's going to cost us $3 million, for the sake of a round number, to finish the infrastructure for those 60 lots. So the way that we structured it was the builder put up $2 million in earnest money. And $1 million of that, the way we negotiated the release of that deposit, $1 million of that $2 million is getting released to us upon commencement of the work on phase 1. So the builder's kicking in $1 million, so they've got a skin in the game. Non-refundable, goes hard, like that money just gets released straight to us. Okay. If it costs us $3 million to do, I've already talked with my local banks out in Bakersfield, a couple lenders that specialize in this type of lending. They'll kick in, a bare minimum about $1 million, right? In lending, maybe if we're lucky, $1.5 million. Okay. I'm going to need to come in with the balance.
Sure.
Right. So, it's $1 million on the high end, plus some holding costs and some carrying costs. So call it $1.2 million to $1.5 million of my money. But if the builder kicks in $1.5 million, then maybe I need $750, something like that. Right. And that's hence why we're selling some of the things, because we want to have that cash.
And your skin in the game.
Yeah, exactly.
Yeah. You don't want to you don't want to take it to the last mile and be out of.
Yeah, and so like for collateral, we've talked about how we're going to collateralize all of this. The builder understands that they need to subordinate to the bank.
Sure.
So the builder obviously wants some protection, but they're going to have to be okay with phase 2 or phase 3 being put up as collateral, because the bank, all of these phases have their own APNs, so they're their own separate properties.
That makes sense.
So 4 different APNs, right? So we can collateralize APN number 1 with the builder, with the bank in first position on that.
Right.
And then the $1 million that the builder puts up is collateralized on phases 2 and 3.
Kicks to 2 and 3. Okay.
Exactly.
Makes sense.
Right.
Okay. And then what do you think the timeline is for something like this? So you're in this deal hot and heavy right now.
Yeah, we bought it July. Okay. I mean, and this is the most painful part, because this is the part where all the money's going out
one
and
way.
Nothing is coming back in for like 18 months, dude. So it's just like $900,000 check for engineering, $50,000 for this kind of survey and this kind of ecological study, just tens of thousands
just going
just
one way,
flying out the door, right? So the time frame, we bought this in July. We expect to be in front of City Council for the City of Bakersfield for an approval. I'm hoping within the next kind of 60 days. That's what we're thinking. We're really close. We're waiting on traffic impact reports, air impact reports, biological studies, some of these things to kind of finish up. But if we're, let's call it 14 to 18 months to get everything, our map approved. Because right now it's just one big parcel. It's just dirt and it's one APN. So we've got to get all of this stuff approved. Now, thankfully, Bakersfield, like a lot of cities in Central California, are short on housing.
Right.
And a lot of the funding that these city governments get are tied to the number of new housing units that they bring online. So the state of California is putting downward pressure on the mayor of Bakersfield, saying, we need houses over there. And this is the number that you need to commit to doing. Otherwise, this much funding right here, we're going to go send it to another. You know what I'm saying?
Yeah.
And so it's one of those scenarios where there's alignment in what the developer goal is, along with the city, along with the state. Now, that doesn't mean anything's going to be easy. It's always going to be hard, but there's always going to be work, but that is working in our favor right now. So what we're hoping is we break ground January to February of 2026 and deliver the first phase September or October of 26.
And that's when the $1 million gets.
So yeah, no, well, the $1 million gets released when we break ground.
Okay, when you break
Right,
ground.
when
Got
we
it.
break
So
ground
January
and we
February.
commence grading that whole project,
All
right?
So when dirt moves.
When dirt starts moving, that's
Okay.
when the $1 million gets released. And so then we work in combination with the bank's construction loan and our cash to just go through and hit all the milestones that we would have set up with our construction team, and we're off to the races.
So when you look at, when I look at your next 5 years versus your last 5 years, would it be fair to assume that you'll, in total, be quote unquote working less, but you'll be working on bigger things? Because you were everything for a while.
Correct. Yeah. That's a great way to do it. I think it's been a very interesting transition over the last 2 years with me, because I am not involved at all really in any of the day-to-day deal making in our core business. Right. We've got a really great team: Scott, Kate, Carmen, Marissa, all of our other team members that help support, and I'm involved in a leadership capacity.
Right.
When there's things that get above a certain pay grade, then I've got to step in and make a call one way or another. But what we're buying houses for, what we're selling houses for, that really the team is making those decisions. And what I've learned is there's a component of deal making that I really like and enjoy. And we're definitely doing that at a much higher level, which energizes me and charges me up in a way that I have not ever been charged up and energized from, doing the houses. Because, at the end of the day, buying grandma's house is a lot different than putting together a 250 house subdivision, you know what I mean? And pulling that out of the ground, dude. That's two completely different things. What I'm seeing right now is I'm so used to things moving at a very fast, and this does not work like that. So we have a regular weekly meeting with the engineer, and I'm like, guys, what's up with this? What's up with this? And they're like, Jason, I understand that you're excited, but this doesn't move at this pace that you're normally used to. You know what I memean? And so it's like we've got to understand that we're at the mercy of we're having to collaborate with all of these different people and entities, and it's something that I'm kind of getting used to, the speed of things moving at a much slower pace, and so just balancing those two things out. Yeah, man.
Well, it's gonna be a lot of fun. We've only got a few more minutes because you do have a call. So let's talk about your first cruise. How you and Jen liked your first cruise?
Man, I got sick the first day, so it got off to a little bit of a rough start. But once I figured out the cadence for the anti-nausea medicine, I was good, man. And it was we were talking about this too, like, this is the perfect way for like Jen and I to visit a place like Alaska, because Alaska is like, I've noticed this on this cruise, like if I were to fly out there, it's so much work to kind of get to some of these places, to spend the time and energy to fly out there, and then when you're there, unless you're going on like a fishing or a hunting or like some real expedition, like outdoorsy thing, which I'm not going to do, this is the perfect way to do it, dude. It's like the balance is like being able to be nice and comfortable, right? And come back, have a nice warm bed, have a nice place to come in, just eat what you want on the ship, you know what I mean? But then we can go out, and we did a helicopter tour of a glacier, which was like amazing. One of my favorite experiences. We rode around on this crazy jet boat the other day. Yesterday we went on the oyster farm and learned a lot about like just that kind of stuff I love doing, man. So this was great.
I like cruises because you unpack once, like you say, you don't have to live out in the woods.
You can still enjoy kind of the lap of luxury, do a little bit of excursions, get dirty, come back, shower, change. It's cool, man. So I loved it, man. I definitely loved Alaska. This was the perfect one for us to do.
Nice.
So normally I love a beach, so I could just stick me on a beach and I'll be good. But like this kind of speaks to Jen, which is important. Like she likes to get out in nature and do all of that stuff, and this was a perfect way to do it, man. So I loved it, dude. I appreciate you and Olivia taking us and showing us the ropes, and definitely won't be the last time we come out with you guys on one of these things.
Awesome. All right, guys. Well, that's fun catching up with Mr. Jason Pritchard.
See you guys.
Peace.